So, good evening, everyone, and welcome to today's session. It's a launch call of Altiva X Top 100 SIF. SIF as an industry, we are seeing is growing pretty fast, and this month number shows that the AUM has crossed 10,000 crore AUM. And at this moment, if I talk about that, most of the funds are coming on the hybrid space and the equity space, and around 7 to 8 AMCs are already they have launched SIF as a products in equity and the hybrid space. Uh, Altiva is backed by Edelweiss mutual funds, and they have launched earlier Altiva hybrid long short fund, which is in a hybrid space, and they have collected a very good amount and crossed, I think, almost 5,000 crores AUM. And this is their second product on the equity space. First one was on a hybrid side. This is on a equity space. It's on a X top 100. It's in a mid and small cap side fund. So without taking much time, I'll just give this call to Ekagra. Ekagra is with Edelweiss. He is head key alliances and business development and having more than 2 decades of experience in this financial industry. And so, Ekagra, over to you.
Yeah.
And I would request you to probably you can just help us to understand your new product.
Sure. Thanks, Ritu, for setting up the context. Hope I'm clearly audible.
Yes.
Yeah. So, like you mentioned about the product, and so thanks setting up the context. We'll take initial some 4 5 minutes on talking about the industry, and then what we are launching and how it is placed among investors. So basically, SIF, like Ritu highlighted, it's one of the fastest growing, and it's been 7 months we are present in this space. In fact, in the month of March, the AUM of industry was 10,300 odd crores. And when April ended, it crossed 12,000. So a decent jump versus March. And I'll just take you through few slides. Initial slides are about what Edelweiss is. I'll not spend too much time. Basically, as a fund house, we have five investment platforms: active, passive, international, gift, and SIF. And as on December 2025, we are the only one who is having all these five. And in total, we have around 70 schemes where investors can participate. SIF and gift are our new areas. Otherwise, active, international, and passive, you all are aware, and I think you would have experienced these funds in one form or the other. So this is our five-dimensional investment platform which we manage. Coming to our team, we have actually three teams. Unlike other AMCs, we have three investment team. One is a fundamental investing, second is factor, and third is fixed income. And also to highlight that we give responsibility basis the strength. So, for example, Edelweiss Altiva Hybrid Long Short Fund, which is a factor fund, which is now 4,000 crore fund, is managed by Bhavesh and Bharat. I think which you can see on the screen that that particular team manages more than 40,000 crores of AUM. So anything which is to do with factor, momentum, arbitrage is managed by this team. So that's why hybrid long short fund, which is a factor fund, arbitrage fund, hedging fund, is part of this team. However, our upcoming NFO, which is going to be the long only small and mid cap product, will be managed by Trideep. So within the Altiva, there can be different responsibility based on the product positioning, and we are the only one having these three different investment capabilities. So this is about the investment team, and the NFO will be managed by Tradeep. So SIFs at a glance. So this is actually data of March end, like Ritu highlighted, most of the AUM is in hybrid. So approximately 75,000, 75% is in hybrid. And this is March end, but by the end, April ended, the industry has already closed 12,000. So between March to April, there is a decent growth, and very lesser percentage on the active asset allocator. So most is on the hybrid, and around 45,000 total folios in the industry. 4,500 people have cleared the exam, and I think by now it's more than 5,000. It's a 1 month old data. So as and when the new month is passing, there is an increase in folios, there is an increase in AUM, as well as there is increase in the distributors who are selling this product. So there is a threefold increase, and we think once the distribution landscape increases, there will be a multifold increase in the size. So basically, the basic thesis of any product is what it can do to investor, because today arbitrage also exists, equity saving also exists, long only product also exists in mutual fund. So the basic question is why an investor should take a SIF, because mutual funds are also fulfilling those needs, whether it's BAF, whether it's arbitrage, whether it's equity savings, or whether it's a long only mutual fund. So what we have derived and what our thought process here is, uh, anything which is investor buys from the what existing is, there are two ways to look at it. Either you lower the risk and may give the same return, or you increase the return with the similar level of risk. So SIF generally does either of these two, depends on the product. Within the same level of risk, the return potential increases, or by decreasing the risk, it maintains the same return. So that's where SIF is positioned, that it maintains the same level of risk and increases the return, or it increases the it without with a little bit extra risk, it increases the return significantly. That's where this SIF actually suits to the investor, and that's basically the thesis point of SIF being part of investor portfolio. So, and also, as we are aware that there are basically seven sort of categories which SEBI has allowed to be part of SIF. Now, what we have done, we have tried to map these SIF categories to the similar mutual fund for the relatively better understanding. So, like equity, there are three kind of equity SIF which SEBI allows: X top 100, equity sectoral SIF, and equity long short SIF. And for all these three, there is a similar sort of mutual fund product. But remember, when I said the previous slide, similar risk, higher return. What we have done here is to help you in identifying that which kind of SIF suits which kind of customer. So X top 100 SIF is basically for the investors who wants mid cap, small cap, flexi kind type of returns by reducing the risk and generating the similar level of returns. Then comes the hybrid, which is the maximum component of SIF industry as of now. Long short hybrid is like equity saving, income plus ARB or balance advantage. Asset allocator are like multi-asset fund, and then comes debt SIF and sectoral debt SIF. As of now, there is no debt SIF and sectoral debt SIF in the industry, but they are like performing credit, corporate debit, and debt offerings. So these are the seven categories which are can be mapped for the purpose of knowing to MF products. They are not similar to MF products because the risk and return level changes. So that's how these seven categories look like in terms of investors' thought process. And then how to evaluate SIF? Maybe we have to spend more time on the X top 100. So I'll not get into this, but I'll definitely get into a different slide, which is the next slide, that within SIF and within the same category, there can be different funds with a different risk approach. So like all, so we have actually named five funds, six funds here. One is Edelweiss Altiva Hybrid Long Short Fund. So every fund is having a different risk band from 1 to 5. Every fund output can be different. Like our hybrid long short fund can be arbitrage plus. In the similar category, there are funds with BAF plus. So the most important point here is to, if you want to know any SIF, most important point is to know what is their net equity position and what is the risk band. If band is on the higher side, they are basically equity sort of propositions. If lower side, they are either arbitrage or debt plus. The intent of showing this slide is you can have conversation with investors to identify that within the same category there can be different SIF. There are two, three parameters which can help you to filter it. Now we'll skip few slides because these slides are about Edelweiss hybrid long short fund, which we are not covering right now. We can cover it later. So what we are doing with our next upcoming offering is, which is X top 100, which is a long only offering where we aim to actually address the customers who are having PMS. So basically, SIF falls somewhere between PMS and mutual fund. So these are the three parameters or where we have identified some of the differential features. So like mutual fund has a regulatory positioning where mid cap is defined, small cap is defined. That suppose if you have an Edelweiss mid cap fund, it has to be 65% mid cap. PMS, there is no category definition. You can have a 70% mid cap, 30% mid cap, and still deliver alpha. In the equity X top 100, eh, by market cap, it has to be more than 65%, only the X top portion. So, for example, suppose it's a 100 crore fund, out of which 65 crore portion by market cap has to be apart from X top 100, which essentially means you can actually take large cap, but up to the extent of 25-30%. So, X top 100 can take large cap, it is allowed, but major portion has to be beyond X top 100, which is 101 to 750 stocks. Now, what the second difference is, in PMS, you have high conviction ideas, 15-30. All the mutual fund today are very, very diversified. There are small cap funds with more than 150 stocks. Where this X top 100 is placed is somewhere in between. It's not 15-30 ideas, but what we are trying to do is 35 to 45 stock ideas. So it is little more diversified than PMS, but high, very, very concentrated versus a diversified mutual fund portfolio. In SIF as well as mutual fund, there is a 10% stock limit. In PMS, there is no stock limit, but we have seen 5 to 15%, and there are other differences. But the most important difference is the last point, which is taxation. SIF and mutual fund both are highly tax efficient. After 1 year, the long term tax is 12 and a half. In case of PMS, it's higher because it is at a every transaction. So if a fund manager sells a stocks after 3 months, 4 months at a short term capital gain, the short term capital gain will be charged at the stock level. And considering in PMS, stocks are in client's demat account, client has to bear the taxation. Unlike SIF and mutual fund, where considering that churning doesn't account for tax at fund level, so that tax impact will not come on the fund, neither on the investor. So that's why participating in a concentrated portfolio like PMS with a high conviction idea is much efficient via SIF because there's a very high tax benefit. Also, one of the point which we have not covered in this slide, in SIF as well as mutual fund, there is a deferred taxation. When we say deferred taxation, which essentially means the tax is paid when you make a profit at the time of making a redemption. So suppose in a SIF you invest, suppose say 10 lakhs in X top 100, and after say 3 years you redeem it and the fund amount is 25 lakhs. So which essentially means on the 15 lakh you will pay tax when you redeem that after 3 years whenever you redeem. Unlike PMS, that every year whenever you are booking profit or loss, you are subject to tax. So the tax is paid at the same year. And this deferred taxation actually is a beneficial for the investor because your outflow is happening but at a later stage. So these are the basically broad differences between mutual fund, X top 100 as a category, and PMS. So coming to some more slides. So what essentially we are doing, we are actually launching a small and mid long only SIF, which we called X top 100. I'll move to another slide which actually talks about portfolio allocation. Then I'll come to this slide that why are we doing small and mid. So basically our product positioning is somewhere here. What we are doing, between 101 to 750 stocks, that will be our universe. We'll do a 35-45 portfolio stock. 90 to 100 is a small and mid allocation. So when we are saying 90, it means minimum 90% will be long. 0 to 10%, there will be risk enhancer and risk management strategies. When we say risk enhancer, risk management strategies, between this 10%, it will be cash, it will be arbitrage, it will be large cap, or it will be derivative strategies. But all these things will be up to 10%. And if you see any mutual fund portfolio or a PMS portfolio, generally 4-5% cash is always there. So the extent of using derivative, arbitrage, or any other strategy is very limited because we have capped entire this portion, including cash, to 10%. So the intent is very clear that we want to do a long only SIF with a mutual fund sort of taxation and with the efficiency that the client can invest in it by only 10 lakhs rather than 50 lakhs of a PMS. So this is the portfolio construction approach. Now there can be questions, why are we doing only small and mid? Why not large? Why not flexi? So what we have essentially worked upon that in current scope of things, why this positioning is more suitable. So I'll take you through few more slides, or in fact I'll go back to other slides which will talk about that why this positioning. Yeah, so basically this is actually last 5 years, not the last, between December 20 and 25. There's a analysis that how growth has happened in different sectors. So we have actually bifurcated within four. Now there is no definition of micro, but the 501 to 750 is generally known as micro, but there is no definition of, there's nothing called micro as a term. So if you see, there is a massive growth happens across mid, small and small cap from 500 to 750 versus large cap. So we feel this kind of momentum may continue. And if someone is participating in India growth story for the longer term, medium to longer term, small and mid sort of high conviction portfolio makes more sense. So basis the historical trend we have seen in growth, that is one of the reason that we have chosen this fund to be a small and mid cap fund. And I'll also come our investment capabilities in small and mid that I'll cover in few other slides. So this is one of the reason that we intend to make a small and mid portfolio. And also this actually, can you anyone confirm that we are on the same slide, broader breadth and lower coverage?
Yes, yes.
Yeah. So basically, this slide reflects very unique thing. So today there are certain industries which are massively present only in small and mid, and very insignificantly present in large cap. When I say insignificant, it's not market cap. It's actually the number of industry. So today, if a fund manager wants to participate in power, industrial manufacturing, the choices within small and mid cap is very wide. So, small and mid cap within industrial manufacturing, there are 12 companies which are listed, and within large cap, there is one. So, the breadth of market, the coverage of market in certain industries like industrial products, 47 are in small and mid, only two are in large cap. Similar thing with consumer durable, similar thing with construction. And in fact, there are certain industries which are massively present in small and mid. Like, to give you example, the largest asset management company is a mid cap company. So there are certain industries where even the largest company is a mid cap company, because uh, in India the market cap is as per rank, not as per size. So talking about some global markets, there the market cap comes on the base of the organization or the cap of the organization. But in India it's a rank wise system. So if a largest asset management company is not crossing that rank on the market cap basis, it will remain a mid cap or small cap company for a long period. So there are certain sectors, industries which are only present in mid cap segment and small cap segment. That's where the choices comes. That's where the alpha generation opportunities come. So that is also one of the reason we want to build this portfolio towards small and mid cap. And this coming to how, so initially I compared this product with PMS, and how this can actually cater to the investors who wants to do PMS. So we have done some studies that, in fact, you guys know it better because you deal with clients, that what is the scope of long only PMS in India. There are more than 2 lakh clients, and the listed equity AUM of all these PMS is close to 4 lakh crore. 500 portfolio managers, 440 equity strategies, out of which approximately half the strategies are small and mid, which essentially reflects that most of the investors are coming in PMS for small and mid for a long period alpha generation. And that's where we want our product to be positioned. We are clearly aiming for all those investors who wants PMS sort of flavor with the tax efficiency of mutual fund. That's where this X top 100 is positioned. Domestic HNI market is close to 2.2 crore plus, where this kind of products can be suitable. So this is broadly about why this kind of product is positioned in PMS sort of bucket. This thing I have already covered in my other slides, that up to what percentage it will be exposure to SMID and what kind of stocks we'll have. Again, so mid cap mutual fund have generally 68, 70, small cap have 85, multi cap 82. This product is going to be 35 to 45 stocks. Portfolio construction I have already covered. Now I'll move to a different PPT, which is broadly to related with product and what is our uh, broader small and mid historical performance been. Just give me 1 minute. I'll load another slide. Now here with this few more slides, we would like to build a case that what has been our small and mid cap performances. So is my screen visible, which talks about strong trailing returns with better risk adjusted outcome?
Yes, yes, yes.
So this is actually not any back tested data. This is the actual data of Edelweiss mid cap fund and Edelweiss small cap fund. With this slide, we are building a case of our small and mid cap capabilities. So mid cap fund and small cap fund both on the 3 year, 5 year, 7 year basis has outperformed the category. In fact, if you see for the rolling return approach also, for 3 year, 5 year, 7 year, 10 year, Edelweiss midcap has been 85% of the time either Q1 or Q2. So 85% of the time above average. Now this is talk about one part we spoke about return. This is more to do with volatility, and this is again the actual data. It's not any backtested data. It's the actual data of our fund. So it reflects the how many up to what percentage we have managed the volatility. Now this volatility what we have, so anything which is green, the fund has done better than the index. Anything which is red, the fund has not done better than the index. So out of last 13 years, Edelweiss midcap most of the time has been able to manage volatility better versus the Nifty midcap 150 TRI. So the intent is also to talk about risk volatility. With this uh, lesser volatility, there has been outperformance. So outperformed has to be linked with volatility also. So these are the actual data of small cap as well as mid cap fund. Now this mid cap is basically from small cap is basically from 2020 because Edelweiss small cap has a history of 7 years. Mid cap has a long history, so that's why initial blocks are empty for small cap, but the fund started in 2020. Now, this is, we are just giving example. We are not saying that we'll construct a 50-50 sort of portfolio. So we have made a combination of 50 mid and 50 small Edelweiss and how has been the trailing returns, actual returns, and what has been the standard deviation. So if you see on the return side, it has basically outperformed the Nifty mid small cap 400 TRI. And on the standard deviation side, the fund has a lesser standard deviation. So what case we are making with a lesser volatility, there has been a better return, and that's where we are bringing the strength of our platform, which is small and mid cap, and these are the actual returns on our portfolios. So again this talks about risk return parameter, what has been the minimum, maximum return, average return on the 3 year and 5 year rolling basis. Now generally in PMS or in any kind of investment, people do ask what has been our good investment ideas. Here what we have covered two things. One is what has been our good investment ideas actually in our funds, and also till when we have held them. And there in fact there is a very unique thing. If you'll see, there are some small cap ideas which actually became mid cap ideas. So KEI Industries, Dixon, and there are some mid cap which actually became large cap. So BEL, when we what it was a mid cap fund, it became a large cap fund. What this slides actually reflects that we have identified few of the better performing stocks which were part of our portfolio, and hence we are building a case of our platform for small and mid cap. Now, this is more to do with, so these ideas we have explained in detail in other slides. What we'll do, we'll share you the entire deck and you can refer to that. But all these ideas and how this growth has been. So like when we talk about KEI, how the stock matters, this basically the previous slide is summary, and the other slides is coverage of these stocks in detail. Now talking about our team, so we have two buckets for this X top 100 sort of team. One is the fund management team, and the other is the equity research team. In fund management team, it is 3D plus five equity fund managers. There is a good amount of experience that everyone has. And in fact, here in just I want to highlight, if you can see on the screen, there is a fund manager named Nikhil Gada under Trideep's team. If anyone can confirm that screen is visible and Nikhil Gada is reflecting on the screen.
Yes, yes, it's visible.
Yeah, so Nikhil Gada is the person who will manage this fund, X Top 100. Nikhil has 14 years of work ex, and prior to joining us, he was with Abacus for 6 years. And Abacus, you all know, is known for their PMSs. So he has joined us around a month or 2 months back. So for this particular fund, he'll be working with Trideep. So that's where we try to bring the capability and abilities to deliver returns to investors. So it's not just that we are launching a fund and we are asking a unit holder to give money to us. We have also worked on the team. Like Nikhil has joined us only for this product, only for this concentrated portfolio. So we are trying to marry the capabilities as well as the output. So that's where this entire fund is positioned. It's a new fund offering launching on 18th of June. So this was broadly about few of the power thoughts around this fund. And we can take questions. In fact, we can give you all this deck in detail. These are the fund details. I think no need to cover in this call. We all know. We'll definitely send this as a deck. So this was more to do with our fund, and we can, Ritu, we can take questions, views, thoughts of the team.
Yes. So, team, if you have any questions, probably you can put it in a chat box. I'll take it up uh, to Ekagra. Ekagra, meanwhile, few questions from my side. Uh, if client, because most of the client, yeah, I think all of the client at this moment, if we talk about, they have a exposure in mid and small cap
Yes,
mutual funds. Why this fund and where they can position this fund in their portfolios?
correct. So correct. A lot of portion of today's industry in mutual fund is small and mid. What we are highlighting here is we are actually want those customers who wants to do PMS.
Hmm.
Mutual fund customers are already there in the industry. In fact, mutual fund portfolios are diversified. So if mutual fund exist, suppose small and mid mutual fund exist, why do people do PMS? People do still PMS because they want high conviction ideas, because they are aiming for a better return their mutual fund portfolio. And that's where this X top 100 is positioned, wherein what we are saying, we'll give you high conviction ideas. We intend to outperform the similar category of mutual fund, but with a tax efficiency versus a PMS. So this is a third category wherein people do PMS, people do mutual fund, but PMS has its own tax inefficiencies. PMS has its own maybe challenges of form, ticket size, all those things. This product solve those problems and give that high conviction portfolio.
Okay, interesting. And second question mostly comes on the valuation side. So if
Yes,
you talk about the small and mid cap valuations, they have came down from the peak, but it's still, I would say, the valuations are rich. So how does this long short SIF strategy make sense for the investors to add in their portfolios?
correct. So basically, there are two parts to it. The investor wants to participate in equity basis valuation, that is layer one. Secondly, versus large, mid, and small. So
Hmm.
today, if you see PEG versus large, mid, small, almost all are at similar PEG because all have fallen. Now, the second question which comes is, does the investor should participate at equity at these levels?
Hmm.
Because if the investor wants to participate between large, mid, and small, all are at equal PEG, which essentially means it's not that large cap are cheap, because PEG is coming to be the same level. not just a PE. The PEG is appearing to be same. When and the most and the biggest dilemma today is about the geopolitical. So geopolitical situation, things cannot be controlled. Having said that, we have actually covered in few of our thoughts that these are the something things to be watched for. If crude remains at a elevated level for a longer period of time, it is going to be a problem. It is actually going to be a problem for equity market. Having said that, does it mean mid small is more volatile or large should be then? We feel for the longer time period, small and mid still makes the case, but to build more sort of liquidity or more sort of lesser volatility, people can have allocation to large cap. But yes, there are some off time which can happen because if crude remains at an elevated level, it's going to be a problem whether it's large, mid, and small.
Okay. No, but Ekagri, you said this strategy will be built on the basically it's a long short, sorry, long only PMS or against the long only PMS kind of a thing, correct? Against the product is positioned as a. So, if I'm talking about X Top 100 Altiva and PMS, so what's the 2 or 3 differences I can see? I can understand, the one is the taxation is the major one. जहां पर आप पीएमएस की बात करते हो तो पीएमएस में आपको स्टॉक वाइज आपका टैक्सेशन आता है शॉर्ट टर्म लॉन्ग टर्म यहाँ पर आपको सेम काइंड ऑफ म्यूचुअल फंड काइंड ऑफ अ टैक्सेशन रहता है इफ यू आर होल्डिंग फॉर मोर देन 1 year then 12.5%, and if you are holding for less than 1 year then 20% kind of a taxation comes. But what are the 2 or 3 differences which actually a salesperson, if they are sitting in front of client, they can differentiate Altiva X Top 100 vis-a-vis the PMS?
So I would say it adds on to the superiority. One is the ticket size itself.
Yeah.
Because for PMS you need 50 lakh, this can be done at 10 lakhs. I'm sure this is not relevant for your audience because they deal with generally HNIs. Secondly, there are very, very small differences. Like the PMS, you cannot lean. You
Hmm.
know, mutual fund, you can do lean.
Yes.
And the ease of liquidity,
Hmm.
the ease of transaction. And I would say from the output wise, it may not differ because what PMS does, PMS tries to outperform mutual fund. With
Hmm.
this product of conviction ideas, we are also trying to do the same thing. So
Hmm.
I'm saying the output wise, it's not differing. The input of convenience, input of taxation. In fact, the deferred taxation actually, if you calculate, sometimes it saves 25 to 30 bips because
Hmm.
you are paying tax when you make profit. You're actually making profit in mutual fund, then you are paying tax.
Hmm.
Unlike in PMS, where regularly you have to book at the stock, sell or purchase. So it actually clubs in the uh, expectation which people have from PMS with the efficiency of mutual fund. That's where the difference is. The differences is in more in the input rather than in the output.
Okay. Okay. Understood. एंड ऑन द इन्वेस्टमेंट स्ट्रैटेजी साइड अगर हम बात करते हैं आपने बोला 80 and 90% पोर्टफोलियो वुड बी ऑन अ लॉन्ग ओनली साइड
90 to 100 minimum
90 to
90.
100% लॉन्ग ओनली साइड राइट
Yes, yes.
so where you are going I mean this strategy is going to use short somewhere or in the falling market how you are going to manage the drawdown.
Yeah, so basically, if you see any sort of PMS investor or
Hmm.
any sort of mutual fund long investor,
Hmm.
they are not looking for short products. If they
Exactly.
want shorting hedging, we already have a hybrid fund where
Hmm.
we do covered call as well as we do some safety net.
Hmm.
This product actually is for those investors who wants long only returns.
Okay.
0 to 10% is cash, arbitrage, shorting, everything. We clearly are not intending to do shorting. So the product is not for those investors who are looking for hedging, shorting. The product is only for those investors who are ready to ride a long only ride with us.
ओके तो यहाँ पर आप क्लियरली इस प्रोडक्ट को पोजीशन कर रहे हो अगेंस्ट द मिड एंड स्मॉल कैप पीएमएस राइट
Correct. As well as mutual fund, because I give you an
एज वेल
example.
हम्म
Suppose you have a mid cap fund and by nature you have to have a 65% mid cap.
हम्म हम्म
Unlike SIF, you can have 40 mid cap, 40 small cap, 45 based on your view. So that flexibility is available in SIF.
Okay, 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 okay. Understood. So here it's a clear 90 to 100% long only small and mid cap ideas, and 0 to 10% you will use basically the
Cash,
arbitrage.
arbitrage, large cap, even 0 to 10 will have large cap.
Okay. So, do you feel this entire space or where you are launching this particular product will either, I would say, the competitor of the mid and small cap mutual funds or the PMS?
I would say PMS because generally mutual funds are diversified portfolio. People who want diversified portfolio come to mutual fund, unlike PMSs, which are 30, 40, 50. So if you see, our positioning is also 35 to 45 stocks. But if you see mutual fund today, even the small cap fund, there are certain small cap fund which have 150, 160 stocks. So mutual funds investors are coming more for diversification. A concentration is more for PMS. So we think it is more closer to the PMS than mutual fund.
Okay. And the entire investment framework would remain same as you use in a mutual fund?
Yes. Yes.
Okay, okay, okay. Okay, I think here the question is there any backdated data analysis between SIF and PMS returns? Mid and small cap SIF versus PMS? Do you have
So,
it?
back tested data, in fact, we have shown our original data. So,
So
we
Prashant,
run.
yes, I think Prashant, Ekagra showed the mid and small cap mutual funds performance data, which
So, we have
actually.
the actual performances. So, there is
Mhm.
no need for back tested as such. The
Mhm.
actual performance of Edelweiss mid cap and small cap are in public domain. We have covered in few slides. In fact, this deck is shareable, so we'll share with you.
Yes, yes, yes. And
So
I
someone
think,
wants to know the tax part of SIF and PMS. X
yes,
top 100 after 1 year, 12 and a half taxation whenever the customer redeems. So suppose customer gives 1 CR after 2 years, it is one and a half, 50 lakhs will be taxed as 12 and a half. In case of PMS, since the stocks are in customer's account, any purchase or sale, any profit and loss is adjusted at the stock level, not at the fund level, which essentially means any kind of churning which a PMS fund manager does, it impacts the investor directly. In mutual fund or SIF, it doesn't impact the investor. So that's why, SIF and PMF are more efficient.
huh, okay. So in short, it's a long only product only, but the probably the ideas will be more selective ideas. You will get it here,
Yes.
and I think for 0 to mostly it's a long only, so 90 to 100% as he said, and it's a clear I think competition, or we can say the competitor of the PMS, where we are also, normally PMS we pitch as a you will get a selective and a uh, very few ideas, fund managers take a bet on the PMS side. It's giving a competition there, right? So nothing, it's a very, I think, simple product in terms of to understand. No derivative strategy, and no long short, though they are coming out with a SIF space, but there won't be any kind of a complicated derivative strategy they are going to use in that. It's a very simple long only product with 0 to 10% kind of exposure they are giving on to a liquidity space, right? So
Yes.
last was few things. If you would like to tell my team something, which can help them to pitch this product to our clients.
Yeah. So I would say efficiency of a mid cap plus return as a concentrated portfolio and without being inefficiency of taxation. So this is a combination of efficiency of returns and output without being inefficient on the taxation form filling part. And also one more part which I wanted to highlight in this SIF generally, although hybrid long short is not approved in your system, but If someone has allocated to hybrid long short as 10 lakhs, then the minimum limit for this is not 10. At the fund house level, it is 10. So they can give 5 hybrid or maybe 10 if there is an hybrid. They can give 1 lakh, 2 lakh here also. That suffice also the need of 10 lakh. 10 lakh is at the fund house level, not scheme level.
Okay, so if one client would like to invest 10 lakh rupees, they can bifurcate in hybrid
5
as
plus
well as
5.
equity.
Yes, they
So
can
it's
do
a
that.
50-50, or they can give the
Anything which totals 10. They can give 1 lakh in one, 9 lakh in another. The total has to be 10.
okay, okay, interesting. So the investor can do it only between the two products, or they can do it only.
So whatever products we have, the total
Hmm.
has to be 10. So currently we have 2. Suppose
Okay,
tomorrow we have 4. They can make the total of 10 on 4.
okay, okay, interesting.
That's applicable for all the AMCs. So till now we had only one. So it was one for 10 lakhs. Now we are launching more. So any investor who has been invested in already in hybrid long short of Altiva have
Hmm.
10 lakhs, they can even invest 1 lakh, 2 lakh, 3 lakh, whatever they want.
And in going forward, if the client would like to switch from one to another, they can do that, right?
Yes. And one more thing, the reduction actively is not allowed. Suppose this 10 lakhs because of valuation becomes 9.
Mm-hmm.
Suppose that is a passive breach of limit. That is okay. But the client cannot redeem. So suppose client has given us 10 lakhs.
Mm-hmm.
Now they want to remove 2 lakhs, which will
Hmm.
make the corpus as 8 lakhs. That is
That's
not allowed. They have to
yeah.
fully exit. But because of market movement, if it comes down, that is fine.
Okay, so because of the market movement, if the AUM reduces, that in that case also switch is possible, right?
Switch between what?
Switch between, suppose, Altiva hybrid to equity, I would like to do
No,
it.
no. Then what will happen now? The purchase of new fund will reflect as 8 lakhs.
Acha. So there also it should be 10 lakhs.
Correct, correct.
Okay, okay, okay. Understood. Okay, great. So thank you, Ekagra, for giving us insights on its top 100 and overall industry, how it's panning out.
Thank you,
And thank you,
everyone.
participants, for joining in. Thank you so
Thank you.
much.